The dollar index has cooled near the 100.20 mark after a strong run. Despite being the longest shutdown in US history, the broader impact on dollar has remained constrained so far. The greenback's latest strength was fueled by a rise in the bond yields following the Federal Reserve's 28 October meeting, where Chairperson Powell signaled a shift in the outlook for upcoming interest rate cuts. Expectations of a December interest rate cut fell drastically in response to Powell's comments. According to the FedWatch tool, expectations for a December rate cut have dropped sharply from the range of 90% to 60%, reflecting growing doubts about the Fed's willingness to ease continuously. This has been the primary driver higher US Treasury yields, pushing the dollar upwards. Now coming to the yield strength and dollar strength, yield differential and dollar strength, the widening gap between the US 10-year and Eurozone's 10-year bond yields after the meeting further enhanced the relative strength of the dollar denominated assets. Now, however, a prolonged government shutdown could begin eroding economic momentum, applying downward pressure on the growth indicators and potentially forcing the policymakers to reassess their stance. If the political impasse persists into late November, the dollar's current resilience could start to fade, prompting a rotation towards traditional safe haven currencies like the Japanese yen or the Swiss franc. A self-critical view suggests that this rally may be driven more by relative weakness in other major currencies than by the intrinsic dollar strength. The euro remains weighed down by sluggish eurozone growth, while the yen continues to face headwinds from the Japan's yield curve control policy. These contrasting fundamentals have granted the dollar temporary support, yet without sustained improvement in the US economic demand or greater fiscal clarity, dollar index recent advance could stall as quickly as it began. Now coming to the technical analysis. So from a technical standpoint, the dollar index has surpassed several notable peaks this year. The index previously topped at 100.25 on August 1st, 2025, before reaching a fresh high of 100.36 yesterday. Another key peak was recorded earlier on May 29, 2025, which was at 100.54, as you can see on the chart. After 5 consecutive session gains, the index has now formed a doji on the daily candlestick chart, signaling potential fatigue in the ongoing uptrend and the possibility of a short-term reversal. Additionally, the RSI has crossed below its 7-day exponential moving average, the EMA, further reinforcing the likelihood of near-term consolidation or corrective moves ahead. Historically, the 100 level has played a critical role in the dollar index. The index found strong support near this zone on July 10th, 2023 and again in mid-September 2024, both times rebounding sharply afterwards. That same region now appears to be acting as a near-term resistance now. So as the index attempts to consolidate after its recent gains. That's all for this video on the dollar index. Thank you for watching.